All right, welcome back. We finished our closing trial balance just in the past lecture, and so again, just to look at it, we have our closing trial balance here. We're now going to get going on our financial statements, and so we're going to have 4 financial statements. We're going to have our income statement, our statement of retained earnings, our balance sheet, and our cash flow. We're going to do them in that order: income statement, retained earnings, balance sheet, and cash flow. There's really no way to check to see if your income statement and retained earnings balance other than looking at your balance sheet, since everything from your statement retained earnings and income statement will go into ending retained earnings, and ending retained earnings will go to your balance sheet. As long as your balance sheet balances, you can assume that you've done your income statement and statement of retained earnings correctly. You're not going to want to get started on your financial statements till your ending trial balance balances. You can if you would like, but they will not balance out correctly. Even if you link everything up properly, they will not balance. And so it can be rather frustrating if your ending is not balanced. So make sure you have that done beforehand and give yourself the time so you're not pressured or rushed as a last minute thing. Okay, so we are going to go to our book. We have our closing trial balance from last time, and all we're going to do is we're going to make our income statement first. So you can simply make the titles come from your trial balances. So we're going to make this equal sales. We're going to make this cell equal cost of goods sold, and then we're going to have gross margin. And so sales is going to come again just from our closing trial balance. All the values from our for our financial statements, most of them, 99% of them, are going to come from our closing trial balance, or they're going to be a matter of calculation. And so one last thing is I like to put a negative here in front of the cost of goods sold cell, just so we see that cost of goods sold is a subtraction from sales. And so here we can just make a simple sum equation, sum those two up, and then I have my gross margin. You're then going to have your operating expenses, which I'm just going to write out shorthand right there, and then you're going to list out all your operating expenses. You'll have your total operating expenses, and then you're going to obviously have your net income. So your operating expenses, again, are all going to come from your closing trial balance. There's no accounts here that are hidden or that you need to include that aren't on your closing trial balance. So all the accounts you ever need to work with are on your closing trial balance. If you want to add accounts, you can, but keep in mind that everything still needs to work. It still needs to balance. It still needs to update. It needs to make sense. So one of those accounts could be dividends, which we'll get to now in the retained earnings. We're going to have our beginning retained earnings. And so we're just going to have that come from our beginning trial balance, since we're talking about beginning retained earnings. We're going to add our net income, and we could potentially subtract dividends if we want. We don't have a dividends account, but you could create one, and then that would lead us to ending retained earnings. Okay, and so our net income, that's going to come from our income statement. We would just simply select the income statement cell for net income. Dividends would come from our general journal, so I'm just going to put down GJ cell, so you know that. And then your ending retained earnings is going to be your beginning plus net income. So we'll select that cell minus dividends is going to equal your ending retained earnings. We have a value here because we have some text there, so it doesn't make sense, but hopefully you get the idea that we have beginning retained earnings, we add to it net income, subtract dividends, and we're left with ending retained earnings. And so our ending retained earnings will then go to our balance sheet. We're not going to update our retained earnings on our trial balance, and we're not going to have the retained earnings from our trial balance go to our balance sheet. We're going to have the retained earnings from our statement of retained earnings go to our balance sheet. And so our balance sheet is going to be organized obviously into assets and liabilities. We're also going to break it up into current assets and liabilities. So you'd have your current assets, you'd have an account such as cash. You can get that again from one of your trial balances, and then you're going to get that value from your closing trial balance. So you're going to do that for all of them. You would have your total current assets, I'm just going to abbreviate, and then you would have long-term assets and then you would have your total long-term assets, and then you're going to have liabilities. You're going to have your current liabilities, and then you're going to have your total current liabilities, and then you will have your long-term liabilities and your total long-term liabilities. So it looks kind of funny with all the abbreviation, but again, I'm trying to keep this short so you guys can be done with this the sooner the better. Then you're going to have your shareholders' equity or owner's equity. And then you will have your total shareholders' equity, and lastly, you will have liabilities and shareholders' equity. Your liabilities and shareholders' equity should equal your total assets, the total of your long-term and current assets. Those two should equal, and you need to have a flag for assets to equal liability and equity. Okay, so you're going to have a flag for that. Quick little snapshot of the balance sheet. This is what it'll look like. Assets, long-term, short-term, liabilities, long-term, short-term, equity. There's retained earnings. You can see up here in the formula bar, it's coming from my retained earnings page. Total liabilities and equity, and I have a flag, and they're balanced. So that's what we're looking for. So hopefully that makes sense. The last financial statement we're going to do is our cash flow. And so as you know, our cash flow, depending on the method, we're going to do the indirect method. Starts with net income, and it has 3 sections. It has an operating section. It has an investing section. And it also has a financing section. And so you're going to start out with your net income, and then you're going to add back depreciation, and then you'll have some changes from some various asset and liability accounts. You're investing and financing. This is why we had the 2 columns for certain accounts in our general journal. And so I'm not going to go through here and build this anymore. Rather, I'm just going to show you how I did mine, and because the cash flow is pretty challenging in itself. And so I think if you just follow along and see what I did, hopefully that'll make the most sense. So I have my operating section. I have my net income. This comes from my income statement. I have my depreciation expense, added that back in. That can come from your income statement or ending trial balance, closing trial balance, whatever you want. And then off here to the side, I have a list of my accounts. And so I don't have them titled here, but I do have them titled over here. So I have my AR, my inventory, and etc. I have the ending balance and the beginning balance, and then I have the difference. So I know if the accounts went up or down over the year. And remember, if it's an asset and the asset goes up, I have to subtract it from the net income. If it goes down, I add it back in. Whereas it's the opposite for liabilities. If the liabilities go up, I add it, and if the liabilities go down, I subtract it. Because we're not concerned so much with the activity of the account, we're morally concerned about the activity of cash with relation to the account. So you're going to total up your net change from operations. You'll have your investing section. Again, you have your purchase of land and your sale of land. So the purchase of land, this would be the debit column for land. You're going to need to make that negative, because if land goes up, the debit will go up. That means cash went down, which means that this number should be negative, hence the negative signal there. Same thing for the sale of land. If we sold land that's a credit to land, land would be negative, but cash would be positive. It would go up. So we need to make that cell negative, so the negative value then becomes a positive value. So again, same thing in the general journal. You had to think about debits and credits in the accounts, and does a debit or a credit increase it? So should I have a negative number here in this cell or not to make this value negative? You got to think about the same thing here, but you got to take it one step further and think about the relation to cash and not so much the account itself. So then we have our net change in investing, we have our financing section, and we're going to do the exact same thing here. We have our 2 accounts that have 2 columns, one of them being bank loan. Again, think about the cash activity with regard to bank loan when I increase or decrease my bank loan. And then you're going to have the net change in cash, which is just the sum of those 3 sections: operating, investing, and financing. And then to make sure everything's balanced, you're going to have your beginning trial balance value of cash plus the net change, and then that's going to mathematically equal your ending cash balance. That number should actually equal the ending cash balance value on your ending trial balance. And so that's what the flag is for. That's where this flag is coming from. You notice that I'm saying this cell has to equal a cell on my ending trial balance which happens to be cash. If if they equal, say balanced. If not, say not balanced. So that's the quick 101 on financial statements. When you're all done, they should all have headings on top, so I know that it's a cash flow or an income statement, because the user of this may not necessarily know. They might not be as smart and as savvy as you are. So you're going to have all your hyperlinks here, and you're also going to head it with a date, so I know that this is for the end of the year, depending on what your year-end date is. So that's a quick run through on that. Good luck. Again, in the order, we're going to do income statement, retained earnings, balance sheet, cash flow. Make sure that balance sheet is broken up into current and long term. If you want to add dividends to your retained earnings page and your other appropriate pages to make everything balanced, you get some extra points there for those added controls. So, all right, good luck. We'll see you in the next lecture.